What's up? Tutum back with you once again. Almost 6 months ago, I did my last Ethereum video. And in that video, I told you the bottom was in and that we would make over 100% move. We're well on the way to that. And if you sit right back, I'll show you how simple and easy it is to do that. All you have to do is pay attention. Let's get into it. Elliott Wave is a really complex theory. And a lot of the practitioners and teachers of the theory like to make it more complicated, overcomplicated. I think that is the wrong way to go about things. I think that it should be simplified. The application of the complicated theory should be simplified. And that's usually what I do. So let's just go ahead and quickly, simply walk through this. Now, that doesn't mean simple doesn't mean easy. It just means simple application, but it's difficult quite often. Just don't make it more difficult with complication. All right, so let's go ahead and walk through this. This is a lot different chart. While very similar to Bitcoin, I find it quite different in a lot of ways. For instance, from the top of this, we had this as a truncated wave at the top. And it was pretty easy to identify in real time. I won't get back into counting over here, but we were expecting a fifth wave advance here, right? So since we were expecting the fifth wave advance, we got the impulsive wave here. There was no reason to think necessarily that it was not an impulse, meaning not a fifth, because no context for it to be a C, this one. And that's what we're always thinking about, right? In application of this theory. What is the context? And the way you know the context is you have to learn the whole damn theory. There's no shortcuts around that, right? You have to learn and understand the complicated theory to apply it simply. So we're always talking context. There was no context for this to be a C. It exhibited the traits that we expect to see directly after a truncation of any type, specifically a fifth wave truncation. It swiftly retraced the entire length of the truncation, and it was contextually placed in that it was the finishing move in a move of one larger degree and even two larger degrees. These are things that you sort of expect to see in truncations. You could do a whole course on it. We'll get into that later in the Discord. Anyway, so we had that in our back pocket, right? So it was fairly easy to project this out as a motive structure, right? Where we can just see, and we'll just go with swings. We won't label. Actually, we'll just throw the labels on it. Where we can see one swing, two swings, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, right? This was a fairly easy motive wave to suss out. It was clearly not a zigzag wave, right? Exhibited no traits of what you would expect in a zigzag. And then we had a very clear three-wave move off of that low, which we were expecting at the time because, of course, we didn't think it was a three-wave move down. That means no correction could be 5 waves. Okay, so we were looking for a zigzag. We got a perfect zigzag, broke down out of it, and this is sort of a textbook impulse at this point. I wouldn't think many people would argue with me there, right? So what we had to this point was what could have been, sure, it could have been the makings of a 1, 2, 3, like we had for Bitcoin. And in fact, that was sort of kind of the expectation, in fact, especially when we broke out of this base channel, as we did here. Very important. But what we had instead was what, in my opinion, at the time, was a pretty clear motive structure. And it's definitely, again, not easy, right? But using simple application of just counting that there's seems to be 3 dominant motive structures in here, right? With 2 major correctives, right? And not to mention, if we use the channeling guidelines, I think that the best practitioners of Elliott Wave will know how to use these guidelines in all contexts very well and sort of base the way they practice around them, right? That doesn't mean that they're not wrong. That doesn't mean that they can be applied well everywhere, but we also need to know where we can apply them well, where we can't, things like that. But in this context here, we know that we broke strongly out of the base channel, right? And then we retested the top of that base channel, just like what happened, and then move forward on, right? For what would be the expectation of a final advance. In fact, the way that the count goes, because this is a little weird, in that the way this structure went, and that we knew that this had to be a motive to start this off back here. We can zoom in just a bit at this point. That we knew that this was a sideways 2, right? So we know right then and there, that's going to throw off the look of our typical wave 2 to wave 4 relationship expectations, right? Because we're usually expecting a sharp wave in wave 2, and then expecting to exhibit the rule or guideline of alternation. You would then expect the sideways wave to show up in wave 4. Well, we already had the sideways wave in wave 2. Doesn't mean we can't do that. It's just not typical expectation, right? So then you have to sort of change gears, flip into your mindset for typical expectation of what would happen in this other lane. Now we've shifted lanes, right? Shifted gears. So we couldn't have used the temporary channeling guidelines for a wave 4 here, but we knew that we were probably looking for something that was sharp. And in any event, once we had this happen, we continued on to the upside, and then we finished. This was a diagonal that ended. And again, sort of like that truncation, when you see these things and they end the wave, there's typical expectation that happens after. We exhibited all of those, followed them perfectly, which, no big deal. That doesn't mean that this couldn't have been a corrective move off the low. But again, this was exhibiting, especially with the extension, the lack of overlaps, the dominant swings. It was very emotive. Whereas at the time, Bitcoin was not. It was corrective. So back in September of 2022, after this wave, as you guys probably saw, I probably flashed on the screen already, I had this as an A, which it was. After this wave, I said, I'm expecting 3 down at this point, bottoms in. So, of course, at the time I could have been wrong. You always can be. But I really did strongly feel that the bottom would be in on Ethereum and not in on Bitcoin, which, as anyone who studies those two markets would know, that's kind of a bold call, right? Because usually they're sort of hand in hand, right? Well, that's not necessarily always true. Sometimes one will run much further than the other in either direction. So the expectation would just be that this would run less than Bitcoin. And lo and behold, it has. We made a low here. It got complex. So what we ended up having was more of I would think, so you would have thought this would have been an A and then B, C, but really what appears to have happened is that we got it was an ABC, just looking at it here, B, C, because this is an impulsive move off this low, A, B, C. I hate that. Right back to it. I hate the look of I miss the old Elliott Wave labels, man. If anybody from TradingView is listening, I really miss the old labels. They were so much better. Normally you guys change things for the better, but not this time. Anyway, for simplicity's sake, we'll just say A, B. Actually, no, A would be there. C to here, right? So, and then we have another zigzag here that's quite ugly. Now, remember, the call for the low was made well before any of the price action that started after this. So we'll go ahead and label it out. And at this point, it's not even that important, right? Well, B is probably there, actually. Tiny little C. Actually, did it truncate? No. We'll just call it double bottom. I'm not going to zoom all the way in. So, there's another way you could potentially look at this thing. You could call it, maybe you could call it a funky impulse to this level. But see, the problem is that this is a very impulsive wave. There's no way for me to call this anything but an impulse. And as we know, a correction can't be 5 waves. And not to mention, you see this mess here. So that's what sort of gave it away at the time. So we're going to go ahead and stick with this. And again, this is going to be an impulse, right? And, I think that's the way we have to end it at this point. What's nice is that we have the effective time on our side. We have all this data to the right now that shows that, in retrospect, this was actually right. So in real time, would I've felt comfortable calling this? No. And I'm pretty certain that in real time, I did not think that this was going to be this type of bottom, right? I thought this was more of an expanded sideways to the downside move, but turns out it wasn't, right? And especially this price action really didn't help at the time. Now, of course, you got to remember that on that other chart that I had showed you, we had showed a potential long setup. So, that's the beauty of once you're able to get in to a position and you have your parameters set up, it kind of sucks sometimes. Well, it's first draw or Fibonacci retracement. Kind of sucks having to watch and hold on, but you know that you've got your parameters set, and I'm in from here, and I'm not out till after here. And the stop loss was below this level, right? So I personally thought when it got that low that we were gonna die, and that's what happens when you get into these trades. Always right at the point of a turn is almost always when it feels the most uncomfortable, that your idea is going to be wrong, and you have to learn to overcome that let's say natural human emotion and just trust the TA. At times it's not always clear, but I mean sometimes your TA is clear as day at these potential pivot areas, but everyone in the world is screaming at you that you're wrong, and it's tough. So you just gotta kind of put your thinking cap away and just focus on the theory. Okay, so then we had this ugly move off the low that, I saw a lot of people try to say it was a diagonal. It's not. There's because there's literally no. First of all, in a diagonal, you can't have a triangle. A lot of the people, and I think that you do have a triangle in here. You would expect to have a sharp wave 2 and wave 4. You would expect to have two needs to be, the way it needs to measure is very specific. Let's just say between the wave 1 and 3 and 3 and 5 and 2 to 4. This doesn't measure. It doesn't fit any of the molds of a diagonal other than it's an ugly little meh move. And you actually have a very ugly rules compliant motive wave, but it's not a diagonal. It's an impulse. So, and this was we were having this conversation back before all this happened. Now, you'll say, oh, 2, but part of 4 overlaps 1. Yeah, but that's part of 4. It's not the end of 4, right? So the rule is that the orthodox end of 4 does not overlap with 1. And, of course, there's people that, not people, but there's EWI has the exception to the rule, and I'm doing air quote, that, 4 can overlap with 1 in leveraged markets, highly leveraged markets, and of course Bitcoin qualifies as such. But you will pretty much almost never see me do that. It's an exception to a rule. Now, what you will see me do very rarely, and only really in hindsight, which is what we did at the time, is I will make what's called violate a strong guideline, and that would be that no part of 4 should overlap with wave 1. In this case, we had some of 4 overlap with 1, but the orthodox did not. Rule not in violation. Okay, so now that that's aside, Elliott Wave nerds, I imagine anybody watching this video is watching it for the Elliott Wave educational component. That's why I'm going into these details. Let me know in the comments if this is what you like. By the way, I can just do these videos and spit out what's going to happen next. Or I can, try to drop a little knowledge bomb. Anyway, since then, what we're having, so while in Bitcoin, you may know my idea in Bitcoin is very different than this. Of course, this wave that came down to here, and here, I'll just throw I'll throw a large degree label on this. If anybody was wondering about that, and they still don't know, they probably have left the video. So sorry about that, folks. Anyway, so this would be a double zigzag correction finish to here. This would be a 1/A. See, I'm not saying that it's a 1. I'm saying it's a 1 or an A. And that's all I've ever said, right? This doesn't have to be a 1. It could just be an A, B, putting in C. But we'll get into that here in a second, more about that, because actually what we're seeing here, while we haven't made a new high, is quite bullish. And again, while this is so different from Bitcoin made a new low down here. And as you may have seen from my expectation of Bitcoin, this is very corrective. And I also believe the price action down on Bitcoin was corrective. The problem on Bitcoin is that it didn't have an impulse on this side, right? So the expectation is that it will finish with a C wave to the upside. However, the context does not have this as a C. So again, while Bitcoin, I think, will go down deep when, let's just say, when all of this does finish, and we'll get into this wave, does go down deep, it will create a new low, or at least test the lows, right, of this low on Bitcoin chart. It'd be that low. Actually, it'd be this low, but that low's down here. Whereas on this Ethereum chart, I don't think, I think we'll come deep down here. Wherever we do finish, we'll come deep and challenge, but it'll be a 2 or a B. And I think it's a 2. Let's talk about it. So as this played out, this is easy, pretty clearly impulsive from the move. We can start talking about the nuance in here, and we will just a bit, of this structure. So this is 1, 2, 3, 4, 5. And of course, we've been expecting this in the Discord. I don't cover ETH as much in the Discord. I do talk about it, trade it, talk about it in the trading channel a decent amount, and I trade it. But our TFTT member, Mecca, he full-time trader, and he's pretty much a full-time ETH trader. So my man is, listen, when you got one of the best ETH traders in the world sitting right next to you, and you look at, I might primarily trade Bitcoin and ES. Why am I gonna try to talk over that brilliance? All right, so again, I don't post on this in our official channels as much, but bullshit in the trading room. So 2, 3, but he's had us laced up on the count. That's what I was getting at. 4, and then the question was 5, right? So this is definitely a potential opportunity that 5 is in here. So that this whole wave is done, and then now, what I was just talking about, the next corrective that's going to challenge, oops, that is not the right tool. That the next corrective that's going to challenge the lows is already on the way. But the problem is, there's a couple small issues with this. The first is that on Bitcoin, it doesn't quite seem like it contextually fits. And yes, I don't analyze Bitcoin and then transpose it over to any other charts. Each chart trades on its own. But typically, if Bitcoin is going to continue its run up, and it looks like it has the chance to do so, so does this one. As you can see, it's already working on that. The alts will run with Bitcoin. So there's that. Second, the move off the high, very corrective looking. Very corrective looking. And the 5th is still even shorter than the 1, this ugly little 1. So, and knowing crypto, you sort of expect almost to have an extended 5th wave. And the 3rd is extended, right? It's an extended wave, but it's not, I'm sure, I'm sure it's 1618. In crypto, though, that's not huge. So basically, what I'm saying is the typical expectation that we would project, and, typical expectation we would project would be, normally to the 618 level. I think that maybe we're extending potentially, or maybe, I don't know, but it could be so many different things, and that's the beauty of Elliott Wave. What we see is corrective off the top. What we see is potentially unfinished in Bitcoin. What we have is a long trend to the upside. So while we'll talk about those larger moves, as traders, we trade degrees within degrees. Now I'm talking lower time frame for trades. We see corrective. We want to get long. I was long earlier today on this, bailed out right before the FOMC minutes like a sissy, but it was a 1 minute time frame chart. When you're trading on those lower time frames as opposed to the higher time frames, you position differently. So you're not really, let's just say you're not really going to hold for larger moves necessarily. In any event, the boys are already long and looking to get long on retraces. Same here for the swing. I think that there's a decent chance that this is going to be an extended 5th in play. It could always be like a sideways B in play, like this forward extend more. That's very potential. That's very possible. Come out here. Let's just try the arithmetic. This has been plenty big 4. It always could get longer and more complex in the sideways here. But I think that we may be potentially setting up for an extended 5th wave. And that would look something like, let's say, this. Where you would get to the 1 to 1, 0 through 3. So yeah, I think that could potentially be in play. Again, we've already reacted down here at this 50. Let's zoom in. And this is what I'm talking about. This is a perfect Elliott Wave setup. 5 waves, 3 waves, and right into a point of confluence, a corner of confluence where it pivots. If it hadn't pivoted there, the idea is probably wrong. And now we're freaking mooning as I record this. So extending 1, 2, 3, 4, 5. Are we putting in a 5th? Probably more bullish than that. Probably 1, 2, 1, 2, putting in 3. This is nice. I wish I had held that scalp. I'd be a millionaire by now. Don't worry. There's plenty more trades to go, boys. I know Monty's long on this. And yeah, so that's the idea. And if one way or another, let's just zoom back out, talk briefly about this. We haven't reached here. If we do hit the 1-to-1 and extend the 5th, we will make a higher high. Okay. So that could easily be a zigzag finish there. We're going to have to pay attention when that happens, but that's, this would still be over a 2x price move from, these lows, 1,000 to over 2,000, right? So over a 2x price move. That'd be beautiful. But now, we could also truncate on a zigzag. We just don't typically expect truncations. What I'm thinking we might be doing is putting in the 1, and then we'll put in a 2. And if extended 5th happens here, that gives us a lot of room to retrace while Bitcoin puts in that sort of, let's say, one more sweep the low move. Gives us a lot more room to work within this price action without breaking, to put in a 2 of 3. And then you know what comes after the 2 of 3? 3 of 3. So let's just, for fun, project that. And really, honestly, projecting, let's say it's here. Projecting at high probability extensions for crypto is not even, it's not even, usually when crypto's going off, it's more than the highly probable expected relationship. So it'd be higher than this. But if we're putting 3 of 3 in next, we could potentially go, we'll even be more conservative than that. Next stop, 4,500. After that, all-time high. If you like that and you really want the full recipe for success on ETH, be sure to check out this taste of Monty Magic.